How's it going, everyone? So in this part of the video, I'm going to continue on talking about candlestick patterns, particularly bullish candlestick patterns. I'm going to show you three today. Once again, I just want to remind you that this is not to be used alone. You should be using this with other indicators. And you should also, I didn't mention this yesterday, but you should also be looking at volume. You want to make sure that as you're seeing a downtrend reversal into an uptrend, you want to make sure that the volume is also increasing because you want to confirm that that trading activity is representing that legitimate increase in price because that is what is going to keep that momentum going. It's going to keep driving that price up. So this first one is a Morningstar. The biggest thing that I just want to share as a reminder that the black sticks in this particular image would be the equivalent to the red candlesticks in stock charts, and the hollow sticks in this image represent the hollow or black sticks in stock charts. So with that being said, let's go ahead and jump right into it. So what defines the morning star is what you see outlined in this dotted box. It's when you have a large body, which is represented here, of a downtrend, if this is the opening price, it closes lower. And you see that again for the second day of trading activity, but it's a lot shorter, right? So it's representing that the buyers are gaining a little bit more control of this particular stock. And then the third day shows that this is where the bulls win, or that the buyers went out and they break the price um, threshold, or they bring the price up. So this is the opening price; it closes higher. And then if you follow the next day, this is the morning star. But if you follow the price activity, you should see it go on an incline. The other thing, like I mentioned, you want to see that volume is also following that. Now it's still morning star because this is just what the candlestick pattern is, but it may not always be the best um, investment or trade if the volume is not increasing as well, because there won't be a lot of momentum. So let's go ahead and look at this on stock charts. So here we're going to do type is stock, and the morning star is true. So I'm quite sure it's exactly the brackets. So we go ahead and run this, and we have one example. And this example of a morning star, you can see here, where if we look at the trading activity here, similar to the image, we have two reds and a black. We have two reds and a black, right? But we want to look at activity, so we don't see that the activity is all that significant. So we would want to, take caution before deciding if this is a good um, buy signal or not. So now let's look at the next one. So that was the morning star. I'm going to close this out, and we're going to look next at what's called the bullish harami. So the bullish harami is similar to the previous candlestick patterns. It's bullish in that sense, and it represents a different way of finding a downtrend reversal. So for the bullish harami, the biggest thing to note here is that the candlestick is going to be coming from a downtrend, right? And the closing price is going to vary. So the opening price, closing price, and then the next day the opening price actually starts higher than the previous day's closing price. Yet the closing for this day ends lower than the previous day, nonetheless. So that's the two indicators that we have a downtrend, right? But what makes this a bullish pattern is that third day. That third day, it's a small indicator, but the small indicator lets you know it's a small bullish indicator, but you're seeing that this is no longer in the red. You're seeing it's in the black, or it's in this case, it's hollow, which means that the people that are buying the stock are outperforming those that are trying to sell the stock. So you see that it goes up just a little bit. So this is the opening price, and the closing price is just a little bit. But you do notice that at the start of the third day, the opening, unlike yeah, actually, the opening, just like the other 2 days, is higher than the previous day's close. So the close here is low, the open is high. The close here is low, the open is high, right? And then it just keeps going higher, right? And so you would want to look at the volume, and the volume should be increasing, and that would be an indicator, as well as you should see greater and greater hollow or black candlesticks. So let's look at this in the workbench. So this is going to be a bullish Harami. It's true. And when we run this scan, we have 15 examples. I'm going to filter this out really quick. And let's look at dolphin. Okay, and so if we look here, we see that the closing price, actually this one did a little bit better, so it's not going to all look perfect, but we look here, this is the opening price and the closing price. And the opening for the next day is slightly higher, but it doesn't end above the previous day's open. So this is one you would want to watch, right? You want to make sure, you want to look at the trading activity. Trading activity is not significant. Excuse me. And my other indicators are showing that this may not be the best example. So let's look at one more. We'll look at HC2, and here's another example. Also not the best example, but you're seeing that here's the open, the close. The open is right there, neck and neck, but it still closes lower. Then you see the next day opens higher, but doesn't go up all that much. So we would want to watch this, right? Look at the trading activity. The trading activity does look a little bit more significant, so this might be a legitimate reversal, but we just have to watch. Okay, and so I want to show you one last one. This is the 3 white soldiers. So if you look here, you can see that there has been a significant downtrend. You know, not perfect, but significant downtrend. But then all of a sudden you see these major, increases in price. You see a major uptrend. And so what defines the 3 white soldiers is that it's a reversal, right? So you're going to see that the opening price is much, there's from the opening price to the closing price, there's a big increase. And then the opening price for the previous day starts a little bit lower, but then it also jumps up. So you see that it starts a little bit lower here as well, and then it jumps up, right? So you'll notice as well that there's no low, or there's a very short low. So that's another indicator. And so let's go ahead and look at this on a live chart. Okay, so for here, we're going to type in 3 white soldiers and run this. Oops, don't forget your brackets. And you'll see one example, Rogers Sugar, and you can see what I'm talking about here. So here it was a downtrend, but here you can see that the opening price the closing price is much higher than the opening price, and the opening price for the next day is slightly under the closing price, but then it goes back up, and likewise for today. So we would want to look at our other indicators, but I'm sure that the volume looks good, right? The histogram for the MACD looks good. This is about to cross over. This is about to cross over, and then if I look at the RSI, it didn't hit 70 yet, so it's still it's not considered overvalued. So that would be this would be one opportunity. So I hope that was helpful. Once again, it was the Morningstar, the Bullish Harami, and the 3 white soldiers. These are candlestick patterns. These are bullish candlestick patterns that you can use with other indicators to help you find good entry points into a trade or investment. So have a great rest of your week, everyone.